Yeah, I think it's better now. I think we're good now. TT, so okay, you all are there. All right, beautiful. So we're gonna get into the market right now. Yeah, I think it's better now. Yeah, that's my live stream is on. So first thing is, what's the purpose of this class? Okay, so this is a live chatting training where I get to chat the market into a perspective, deep perspective into the week, while we also have an opportunity to collaborate. This is also my collaborating session where I get to take questions that you won't learn in the course of the week, things you actually that are gray areas in trading. You have the opportunity to ask me. You bring anything you want to learn, anything you want to know about, all right, I have that, collaborative opportunity to share insight into the market at your own will or at your own request. That's what we do on a thought. So it's almost like a mentorship, trading mentorship night. Okay. And most importantly, I also look out for the trades that would extend into the week, in the course of the training. So don't take this class Monday nights for granted. Don't miss it. It's a session you don't want to miss, okay? Because why? I'm at a relaxed state to actually learn. All right. Does that make sense? Put sense on the chat. With that being said, the first thing I want to do is first take a review into the first things I saw in the market. And you can ask me anything about my trading, okay, and I'll deal. So this morning, I called a trade on where is US oil. So I'm going to review all my trades to see, what happened. I called a trade on US oil. I called a trade on Euro USD, okay, moved a bit into profit, but took us out on our SL. Market is still consolidating. It means the volume of the week is not yet set. It's not yet angry, okay. It's still consolidating. And I also, the trade on US oil, look at what it did, okay, moved. I believed it did. I don't know what happened, but somehow I didn't tap my first TP. But if we look at this, normally when I do TP. TP1 is 1-to-1. Okay, if I'm looking at this right now, just a moment, I was supposed to 1-to-1 was okay. Yeah, the trading do 1-to-1 farm. That was just almost, so it was almost 1-to-1 and phew, went back. Actually took me out. This was a good trade, but took me out. All right. So that was the second trade for me. Okay. And yeah, the direction of the market is going to come here. It means that's an L. I took an L. That's why the fact that it moved. No management. I didn't actually break even, because for me to break even, it means it would have hit TP1. Okay, but it didn't. This is the type of trade you look back and oh boy, why did you weak me? This is almost like a week, but that's a sad one, but it is what it is. Okay. So I gave you guys another thing I looked at on gold. I told you guys you want to watch out on gold when it breaks this level, comes back into this level for a major sell. Or pretty still, this is a sell area that may dump this market right back into 28587, 2855.36. Okay. So if I'm looking at this market right now, let's see, I'm on a 1 hour. Okay, I'm on a 15 minutes. Let me go on a 1 hour. So probably this is the first analysis I'm going to do. So this was the break candle. I tell you this. Let's see. I see. Okay, good. So I'm going to do this. So we have two areas this market is going to split and sell. The one is this, okay? Another is this area. So this is what I am going to do, all right? I am going to look for a sell position during the course of, I'll be sleeping, okay? I'll be sleeping during Asian session. So, but this is a trade probability around this area on gold. The market should have a force of a sell, and let's see. Yeah, this should be a good trade. So market had a switch of If you look at this right now, this is the highest candle. It means, all right, this is actually the swing low that took away what? The previous high. So this area we'll see here right now, there's a bit of a change of character here already, okay? And if we're looking at the low that has been holding this liquidity, this is the low that has been holding this consolidation. It means there's a whole lot of volume in this market, but this is a low. If this candle took away this low already, and there's already been a change of character, all you just need to do, all right, is market to come fill up the gaps that are within. So where's the first gap? This is the first gap. All right, there is a gap after the break. Market left a gap between here and here. So this is the first FVG. Okay, this is why market could sell from here. So that's why you see I did this analysis. Market could actually sell good from here. Okay, but if it wants to consolidate because of there is no volume, market may hold, maybe pick this area. Okay, and we're gonna have a strong. So it means there's gonna be strong push on a sell here. First is this: we may escape. This may actually push it away. All right, but there's a whole lot of safety here because why? What it does is it reduces your risk. If you're taking the trade here, normally when you take a trade, okay, the next high is your SL. It means it's your risk. So if I'm taking gold here right now, I'll be casting so much risk. From here is so much risk because if I'm taking the trade from here, somewhere around here, it means I'll be putting my SL same area. That is about 192 pips. Okay, though the risk to reward now will be probably 1 to 2. Okay, it's not even up to 1 to 2. So it's a good trade, but the reward is just, it makes the reward smaller, but that's a good area. Okay. Sometimes when you find your probabilities, what you're looking for is the best probability for your risk, not the best probability for the trade. So the reason I like this area is because the fact that it limits the risk I'm going to give to this trade. So about 137, that's about 13.7 pips on gold factor. All right. And so that's going to be my first consideration on a good trade on gold. First consideration, coming back into the area of change of character, all right, into this gap, putting my stop loss above. Now, yes, can remain. This is still another area, but the chances is it may never actually get here. All right. But because if it breaks this area, this is going to be the last point. So 3 opportunities I have on gold is 1, 2, 3. How can I treat it? Light risk on this one, a heavier risk on this one, light risk on this one. That is what I'll do on gold. But the thing that I'm feeling on gold is because I don't want to do a pending order. That's me. I'm just trying to tell you me. I don't like to do a pending order on gold. Okay. Yeah. Can I take a pending order on this trade? Absolutely, yes. Any trade can be a pending order, but based on my type of risk and my type of trading on gold, I don't like to do a pending order. I love the market to get there and I want to see a rejection. Gold is a very volatile pair, so you can actually be patient with that pair. If not, you're going to be bruised. Okay. So what I want is I want the market to come hit here, maybe on a 15 minutes reject, open a new 15-minute candle that is a sell and I'll get in. All right. That is my confirmation on gold. This is where I want to, trade gold for a sell. Okay. Point. So let me label it and you guys could take the screenshot of this. So this is 1, 2, and this is 3. Those are 3 areas the market may likely sell on gold. All right, put 10 on the chart if you got this analysis. Now, if you want to do a pending order, that's also fine. You can do a pending order. Okay, that the market gets here. All right, put your risk. So this is what I would call because gold is on premium, it should sell. Let me drop the chart so that you guys can copy or follow it. Now, if you have a pair you'd like me to analyze, you can actually share. Yeah. The network, sir. Huh? Oh. What's wrong? Is my network okay? You said the network, sir. Was that? Let me drop an alarm in this area. I don't know, but I have a feeling that if I'm sleeping, the market is gonna come here. Okay. So AUD network is fine. German 30. All right. So let's go to German 30. Now let me give you guys an insight. German 30 is a pair you want to trade either on the London session or the New York session live. Okay. But ultimately, let me give you a scope on what I'd look in the market. From a swing perspective, the gold I caught, hold on. Where's gold? So this trade is a swing trade. The potential for this trade is, now you guys watch, look at this. You know, when I give you a trade like this, okay, I just gave you this to be a reward, but the ultimate reward is actually here because this is the whole range of the market. Where is this guy? Where is this guy? So this is the whole range of the market. So even if we have to do 50% of it, all right, it's going to be somewhere around here. This is good. This is good risk to reward. Okay. So if you're looking at this trade right now, the perspective of the trade goes beyond where I even called. Where is it? To swing this trade on gold. Okay. It's just that I don't like to swing gold, but I'm just trying to tell you, if you want to get one trade that take you to the moon or down to the, yeah, is actually a 1 to 11, because if this market breaks this area on a big score, we see that the market is on premium. The only thing it has to do is it has to defeat this area. That's why I put the stop loss there, the take profit there. This is a strong area. Okay, it has to defeat this, and if it defeats this area, market is dropping. It's a free fall. It's a free fall to this area. So this could be one hell of a big trade. You guys mark this trade, okay? On this date, I gave this trade. One hell of a big trade downward, all right, if gold trips, all right? But I'd love to get out here and watch out for what's going to happen here. But this is a long swing. So if I'm also going to be giving you guys German 30, what do we see on a big scale? The first thing you want to do in the market is know where the market is coming from. So if I see this market right now, this is where the market is coming from. This is the low that took the market all this way high. So this means this is my range. Now watch it. I am giving you guys a scope of analyzing the market on a deep trend. So this is the most active word range in the market right now. This is the flow of liquidity on the downside. Okay, and the market has peaked a liquidity on the upside for supply. This is happening right now. Okay, so if this is the activity, it means this is the high of the market. There was a reaction on the low. Now liquidity got grabbed. So what are we looking for? Pretty simple. I push on the lower time frame to see, okay, so this is the point of interest. So all of this is grab of liquidity on the daily, but now we're seeing it on the 4-hour. Okay, so what is the low that took away the previous high? So this is the previous high in the market, but this was grabbed. It means there's a liquidity grab here. And if there's a liquidity grab, it only shows that, oh, that is the fake volume in the opposite direction. So what do I need to do? I need a change of character for market structure to set me up for a sell. So that is one approach, okay? Another approach I could add to make me feel better is, oh, it created a trend. If market break below this trend, that's a confirmation that this market is selling the premium, okay? Which is also good. It goes all the way down. So now I'm aligning different shades to see that, oh, this market is really preparing for a sell. If he sells this right now, what does that mean? I could target the next dimension of the root of what? That trend. That's it. It means if this market break here, this is going to be my first bust off safe on this lower time frame. Okay. But what do I need to take this trade? I'm not just projecting that, hey, if this market breaks here, I want to sell. No, the market has to change character. Okay. So this is the low that took away, that grabbed this liquidity. It means, all right, there's a swing low here. It's called SL. I hope I'm not being too fast. Okay. There's a swing low here. It means this is the, all right, the high, the swing high of the market. What I just need market to do is market to eliminate, okay, this. It means that's a change of character. Market has to come back into, now we may watch the dimension of the trend, or we may watch the dimension of a what? Now, if you watch this right now, there is a gap. But I may not be picking gap up here, but now I want to list everywhere there is a gap in the market as the market is coming down. So right now there is no gap, but the candle that is going to break here, it's going to leave a gap probably. Okay, and that's what I will be watching out for a sell. Any candle that leaves a gap will begin to be my projection of market structure shift. So if the market takes this away right now, we're going to have a deep sell. So what's going to be the projection of this sell? Crazy. First is going to be this. Then ultimately we're going to be, and this is also 50% of this move, which means this is fine. Safely you get out here, but you can actually target all of this liquidity. So if this analysis could happen on a 4-hour, good. All right. But whether it's on a 4-hour, whether it's on a 1 hour, this is the place the market needs to take out before we're going to have major sells in the market. So that is one approach on a swing trade. Okay, if I want to get a good swing trade that I'll be seeing some deep market, all right, that's the trade I just gave you guys right now on German 30. Okay. But I rarely play German 30 on swing trade. I find opportunities every morning. So I don't really do swing trading on German 30. But because you asked, someone asked, I'm doing this on a swing trade level. This is what I was looking for. Okay. On a day trade level, we're probably going to be, market is going to probably come to this consolidation, probably come filling this gap and drop. And you can start targeting TP in between the days low. All right. There are several approaches to trade the market on a day-to-day perspective that is different from a swing perspective. Okay. And it's a little different from a scalping perspective. All right. That's why I taught you guys the 4 approach to trading. Either you're doing technical, or you're doing market structure, or you're doing price action, or you're doing trend. Okay. And you can infuse. You can find a strategy to infuse. Like I just did right now, I infuse trend, which means there's a stronger confirmation. When this market breaks this area, I could actually trade the trend, reverse of the trend, which is the reverse concept. Man, I got so much strategy I've taught in this lifetime, man. Okay. Any question on this? You guys got it, right? Put 10 on the chat if you got this one. G, you got this one, right? So you can take that screenshot, that bold screenshot. I'm going to type it on chat. I'm not going to put it on the, I'm not going to put this on the main group. I did this for you. So I'm going to send it on the group here right now. Okay. Anyone who's interested can take that. So, hold on. That is DER30. All right. D30. Okay. So I'm gonna dive into AUD USD. That's one pair someone requested earlier too. So, and the truth is, I'm not just analyzing this. You guys should see what I see in analyzing the market on a deep perspective. Man, there are so many approaches to trading. Okay. There are so many approaches to trading. I'm looking at this market right now. Over the next couple of days, I would expect a sell in the market because it just clicked a journey. All right. So it depends on how you're looking at the market. This is a big wave. All right. Market is leeching on that wave. So we're looking at this right now. We expect market to concrete a new low, which is an expectation of a sell. So already I perceive that this market is going to drop down, okay, because of what it is forming. But many of you don't know this. I'm just trying to show you. The more you learn the market, the more you see the market from different perspective, okay? And that also could be, let's see. Let's go up. Where are we right now? You can't really see the market for what it is until you go to higher time frame. You'll see the evolution of the market when you look at it from a higher time frame. Pick a low, all right, and see what's reacting. So this is a major low in the market. This is a major low in the market. Market is not here, so I don't care about that. Market is here, all right, so I care about it. It means this is the point of interest market is reacting with right now. So market is above a point of interest, which is a demand zone. But before it's above it, it actually grabbed it. So what does that mean? It means on a weekly perspective, there's been a liquidity grab. What does that mean? If on a weekly perspective, there's been a liquidity grab, the language simply means if the force pull, if market structure sets up on a weekly, you are, man, that is a swing of a lifetime. See, the deeper the time frame, the stronger the potential. This is not a daily grab. This is not a 4-hour grab. This is actually a weekly grab. So it means this was the point of interest before this market got to this area. Okay. So before this market got to this area, if we're doing analysis, two things we're going to consider in this weekly analysis is the weekly high. So this is a weekly high. This is also a weekly high. Okay. But market is not here right now. Market is getting close to this high. It means this will be a perspective for my analysis because this is now the present range of the market. Now, there is a training that I did that I talked about liquidity. The pretty most important thing in trading. What are the, who's here? Who can tell me what I shared? What are the, okay. There are a couple of things that I've shared in trading. If you've been following me, that I said they are more important than support and resistance. What are those things? You guys listed on the chart. If you guys could have an understanding of these things I mentioned, you're going to be a different trader. Okay, listed on the chart. Okay, Steven, say range and liquidity. What's the next thing? Are you guys with me? You guys shouldn't miss what would change your trading career. Don't miss it. And most of the time, I always say these things, you know, maybe because of the direction of what a lot of people come in to learn, they miss out the most important thing in trade. The most important thing is your attention on things that matters. Okay, what really matters in trading? A lot of people are learning trading wrongly, hence they get wrong result. Why do we see a lot of people do so hard? They struggle in trading, they struggle with risk management, they struggle with proper market direction, they struggle with even the chart. That's because you're looking at market lags. The market is lagging. Everything you see is a dimension of what has already happening or is happened split time before you're seeing it. Okay, it means people are seeing it before you see it. And if there are a lot more people seeing it before you see it, you don't stand a chance. So what are the things you ought to see in the market? It's not support and resistance. It helps your analysis take your trade. But if you really want to get a good trade, you should see beyond support resistance. You should see beyond all of the strategies. Okay. You want to see the structure of the market. And when you see the structure, there are components. I'm going to say this tonight, right now. I need you guys to take this serious. It will help you. You go practice the things that I'm saying. Put them into dimension when you're doing your analysis. Even in fact, attach your strategy to these things. It will change your results. Okay, because it has mine. The first thing is when you want to do any analysis, don't just look at the chart. When I open this chart right now, are you guys following? You guys tell me what you see. Everybody on the chart, everybody in this session right now, tell me what you see. I'm not asking, that's just a question. Tell me what you see. When you look at the chart, what comes to mind? Irrespective of what you know, based on what you know, what comes to mind? Everybody on the chat, everybody on this session, answer. I need an answer from everyone. Nobody keeps quiet, all right? Nobody keeps quiet. Everybody on the session, share with me. What comes to mind when you see the chart in front of me right now? Okay, someone says trend, someone says the structure. Okay, structure and trend of the market. Everybody, nobody's a novice here right now. What comes to mind when you see the chart? There's no direction to my question. It's just what I'm asking your heart. When you open a chart, what comes to your mind? What do you want to do? If you're seeing this right now, what is the first thing you want to do? Or what is the thing that comes to your mind you want to do? Swing high and swing low. So guess what? I did this to say something. I want to train you something this night, okay? Because it's a training session. And this could help you. Because my goal is not just, that's why the fact that I call trades every day and I train you, I come on live. Don't be too dependent. It's a good thing you leverage. But in the next 6 months, 1 year, if you're still leveraging me and you don't yet have the skill, okay, I really don't know who you are. You're a very unserious human being. All right? Yeah, period. Okay, I'm not saying it. I'm not saying it with I'm not saying it apologetically. I'm not micing words to say it. If you have this opportunity that I'm offering right now, in 6 months, I keep up my game. I'm showing you how I trade. I am trading with you. And in 6 months, 1 year, you do not know how to analyze this chart on your own. If I am not there, then you're a very unserious human being. Okay? Take it from me. All right, as a mentor and a coach. What am I trying to tell you? If you do not put in the time to independentize yourself, if you can make yourself independent, despite the fact that you have offering, it makes you more confident. Okay? Learn to do what I do, even if I have to do it for you and you get to leverage it, but know how I do it. Because why? I do it every day. I show what I do every day. And I get a comment and I say, oh, ask me a question. What do you want to know from me? If in a year I'm asking you what you want to know from me, and in a year you can't tell me what you knew from me, then you are a very unserious human being. And I believe there's nobody that is unserious here right now. Is anybody who's unserious? Raise your hand. Okay. I believe all of you are serious. Put I'm serious in the chat. Are you all serious students? Okay. So I'm teaching something very serious right now because I get to train deep. If you're serious, put I'm serious. I'm serious about trading. Okay. And if my words are offensive, you should leave the class. It's very simple because I told the truth. All right. Serious. You're serious. All right. You're serious. All right. Good. If I'm offending you, just take a deep breath. Just leave the class and come back tomorrow. You're going to feel better. All right? You're going to feel better because I'm just telling you the truth. Okay, I wouldn't take this opportunity if I was where you are right now. I wouldn't take this opportunity that someone is offering me if I was obsessed about trading. In fact, I'll worship the opportunity. Okay, so many of you have been traders, but there are certain things you lack. I've been a trader for years. There were certain things I lacked. I found out things that have got me where I am today. Okay. And I'm still learning. I'm still growing. Okay. But the few things I'm learning right now, I'm leveraging and I'm sharing. So one of the things I realized in trading that have got me more stable, which a lot of people don't have, they don't have stability. It's not about winning. A lot of people can win, but they are not stable. All right. Your biggest achievement in trading is when you become stable. When I look at this chart, when I look at the chart, the first thing I want to do is I want to approach from structure. I want to approach from my strategy. Okay, so if I'm trading the trapping strategy, I want to find consolidation. So anywhere I find consolidation in the market, okay, I want to break out. And when the market breaks out, okay, do this. Guess what? I may find TP in between the week. That's good. I probably would have found TP in this trade. Okay, but that was luck. Okay, or now, if my knowledge is, this is a weekly trap and the market breaks above, I can target this area, limited. It's a good thing, it works, but I am limited. Because the truth is, what controls the major move of everything that is happening here, ladies and gentlemen? Okay, watch this. I'll do this again. So the first, okay, good. So the first thing you have to know in the market is this. Where is the market coming from? Where has it gone to? What's the peak of liquidity? What's the liquidity? What is the liquidity on the high side and what's the liquidity on the low side? On the present market, it's called a range. What is the range of a market? Okay, and the range is dictated by what? The liquidity on the high side and the liquidity on the low side. So we're looking at the weekly perspective. Okay, so everything that happened here is coming from here. So presently on this week, this is the high liquidity and this is the low liquidity. Everything is in between. Okay, it means the dictation of this market is either going to magnet to this low side or it's going to magnet back to this high side, period. The moment you understand that this is my range, every other thing is unimportant. You see, anything backside here right now is unimportant. Because why? My target as a range trader, okay, is either the market is going to come here or it's going to come here. Now, this is where strategy and the approach now comes in, okay, which is the second thing. So this is the high side liquidity and this is the what? Low side liquidity. So liquidity and range, that's the first thing. You want to understand that, okay? I did it on the weekly. You can do it on a 1 hour. You can do it on a 5 minutes, whatever timeline you're trading. Now, I'll give you guys another perspective. So, Cambry, we're here right now. You want to do this analysis? Let's go back. I really want to understand what this liquidity means, okay, so that I can know what I am doing. Now, watch this, okay? Now, let's take a look at, I want to drive this market a little bit backwards. So let's look at this market from is right now. Boom. So I have a move of a market. Okay. Good. So if you're looking at this market right now and you are here, first thing you want to do is what? Be able to capture where was the market coming from here or probably here. Okay. And where was the peak, which is what? Here at the moment. So this is my week. Does that make sense? The moment I know this, what is the next thing I want to approach the market? It's even very important before you're doing this. It's called what? Premium and discount. The people who put volume in the trading market, who have the highest liquidity, they don't trade support and resistance. They control what you see as support and resistance by volume, by liquidity, by space. What area is the market right now? Is market on premium or market is on discount? When people want to buy low, they buy low on discount, okay, and they sell on premium. It's a concept of commerce. So if I'm looking at the chart right now, okay, when the market was here, I'll take this bar a little bit back. Watch this. All right, good. So this was a high of the market. Okay, this is a low of the market. A high of the market, it means this is the premium level. So there is a measurement. There's a box called GAN. You can customize it. This is it. This is it. So all of the red level is premium and all of the green level is just 50% is discount. What does that mean to a trader? When the market is on premium, sellers are invasive. This is where you have to leverage over the pressure of sales. The higher the premium, the more your potential as a trader. Am I making sense to any human being right now in the chat? I'm just giving you guys concept. All right. Am I making sense? Put sense in the chat. It means when the market is on red, based on any range, what you should be looking for as a spot trader or a position trader or a swing trader, okay, you know, I told you guys it's more of a concept of what trading, okay, is now it's not about swing. It's you can actually use this on a smaller time frame as well. It works, okay? Every concept works irrespective of time. Now, the dimension of possibility or potential may be different based on the timeline you're trading it. Okay, good. So if this is premium, what should I be looking for? I should be looking for sales. You know what that eradicates? Confusion. I can't come into the market and I see this type of market right now and I'm looking for buy. except I'm trading another strategy. But it's the concept of, oh, what direction is this market going right now? I want to follow this direction. And if you follow the direction of the market, that's truly when you make a whole lot of money. Now, this is where strategy comes in. So I know where liquidity is right now. I know where range is right now. Okay. And I also understand the market is on premium. Let me look for sell. What strategy am I going to use for sell? Now, this is where my next factor of trading comes in, which is market structure. There's a story you can always tell in the market. It works. Okay. If a market hits a high premium level, okay, or a low discount level, before it's going to go kill the previous. So I tell you, so this is, what did I say when I was talking about range liquidity? Market will either chase the low of the liquidity or the high of the liquidity. Okay. So now market has hit its high and it's coming back. Where is it going to come back to? Liquidity level, the low of that liquidity. So over time, market is going to come here. But how is it going to come there? Before it comes there, there's something it will always do. You guys mark this as a statement tonight. All right. Before market is going to make big move to eradicate a low liquidity, there's something it does. So if this is the high of the market or this is the low of the market, all right, if market is going to make, let me use a different tool. So if this is the high of a market has been created and market tends to want to go back, it won't go back to come take this low immediately. There's something it's going to do. It's going to come back and it's going to raid the previous level. It means when this market hit this one, it confirmed a good point of interest. But there is liquidity there. If the market makers or the people who truly drive volume in this market wants to push this market down to this low, there's something they do. They take money from people. They borrow people's money. And that's what we call a liquidity grab. It means they chase people from the market, take their money, and actually drive the market in the direction it needs to go. But what happens? Now, these are things you just notice. You don't trade it, you don't form it because why? You are a spot trader. Okay? You're not the one who controls the move. You're the one who sees it and you take advantage of it. Now, if this happens, something you do, this becomes what? A point of change. It's called change of character. The leg that raided the market is the most promising leg of the structure. You want to watch out for that. It means this is a high. This is not a new high. Watch that. Forget my spelling and just listen to my words. Now, market comes back, take away this. It's called what? A change of character. When that happens, that's when you start finding what? Structure. So this is my high structure. If I find a new low structure and there's a break of structure, this is change of character, break of structure. Anything that comes after that is a drop. It's called market structure self-formation. If you could see three things in the market after a peak liquidity high, three things you want to watch out for, or a structure you want to watch out for is this, take away this. This is what? A change of character. Now, it's just like if you go to a foundation and you see the way they are building a foundation, you can tell what building wants to go in a place. Okay. If I see a new low, this is a high, and I see a new low. Okay, so this is low 1, this is low 2. And there is what? There's been a change. Don't forget, there's been what? A change of character here. And another break of structure happens. That is a what? First break of structure, which is a change of character. Second break of structure, okay, will give me, I'll look for a trade. This is called the formation of market structure. It happens before every major move that would take the highest liquidity in the market must do this formation. So I'm here right now. So over the next couple of weeks, market got here. But let me prove to you, okay, how market got there. Okay, watch this. I'm going to stay on the weekly so that you can know that it works on all time frames. So what happens next is, so you guys watch this. What happened? There's been a grab of this liquidity. Let's see if it does it again. Watch. Okay, good. So let me pause here and let's look at the structure of the market. Okay. So number one, this is a breakout structure. True or true? Put true on the chat. If you got that, put T on the chat. So there's been a break of structure to grab out this liquidity. So this is a new high, right? So it means if this is taken out, it means there's a change of character. Okay. After that change of character, what happens next? I told you it's going to be a break of structure. All right. So there's a low, there's two break of structure. Now, one of the things that's very, very critical in the details of this market is after this low, after this high, okay, there was a change of character. But this is the low. I'm on a weekly, so the candles may be very, very, impulsive. But this is my high. If this high was taken out, it means this will be my second high. But this high wasn't taken out. This is higher than this. So automatically, okay, because this wasn't taken out, all right, and this is my second break of structure, my trade already happened. Because what if the moment the first change of character happens and the second break of structure happens, I'll be looking for a trade in any of the gap. Either I'll be looking for a trade, as I tell you, this is where the strategy now comes in. After the structure, strategy now comes in. I probably would have gotten in on a trade here, and my stop loss is going to be above the high of the market. It means I am in this trade already. Because why? What did I tell you? The moment there is a high, okay, and there's a change of character, okay, and this is now a new low, and there's a new high, which is lower than the previous high, you've already had a formation of what? Market structure for a bearish move. But it is activated when there is the second break of structure. So this is the second break of structure. So all I need to do is switch to what strategy? What strategy? If market comes back into a fair value gap or a previous low, okay, that was broken, then I'll take a trade. And that is what we have here. It's called the market structure shift strategy. So I probably would have taken a trade here. All right, because if we go into a smaller time frame, you're going to see that area. Hold on. Oh, okay, good. So I probably would have taken a trade here or taken a trade here on these levels, because when the market came here, it came back. So this level, I would have taken a trade and I would have put my stop loss above that, because that's how you take this type of strategy. This is how you swing. You swing it. Okay. So it means I'm in this trade already. I probably may give you guys videos on to learn this particular strategy. I'm only doing it to show you what happens after. Okay. So let's see how this market drove down. If it went up or it came down, if it was an SL or it dropped down. Okay, I think this market kept consolidating. Okay, this is where the present market got to. Let me fast forward this. This is going to take a while. Can I fast forward it? I just need you guys to, I know I'm doing it on a higher time frame, so this may be a long run. Okay. Can I push it forward? Let me see if I can push this forward the bar. Oh boy. Yeah, where was I? Where was I? Oh shit. Oh, I disturbed the move, right? Okay, but this is what I analyze, guys. This is what I analyze. Eventually, did the market get to that low? Absolutely. Did it ever get beyond this high? No, because it's already, from that market structure, it already promised you that the moment market does a raid and it creates a change of character on that higher time frame, and it creates a two break of structure, or if after this change of character, okay, a break of structure, the market has given you 90% activity that is going to drive to the next level of liquidity. It may take a while, but did it do it eventually? Absolutely, yes. You want to know how many pips that took? How many of you want to know how many pips? That's a long move. So if you took this trade, let's say a couple of months ago, all right, around here, and you drove it down here, this is about 2,000 pips. How long did it take before the market got here? Let's see. Let me take it here. And it got here. That is about, is it, am I seeing? That's 8,000. That's about 2 years, right? Because I did the market on a weekly. So it's not about the timeline. It got there eventually. And I can go on smaller time frame. I can show you this over and over again. When market, you could get a premium of a market and a discount of a market. Okay. And you could apply the range. So this was the range. Eventually it completed the range. Okay. Now, Kenvry, you're doing higher time frame. I'm looking so confused. I'd love to drive this deep down. Okay. I want to use Euro USD. I hope you guys are learning something. This is something you guys should learn. Okay. Trust this. I want to use Euro USD. Okay, I'll go a little bit. Now watch this. Let me use a 4 hour so that it's not too long and it's not too boring. So this is the present market right now. It means this is the present range. But I won't deal with this right now because we do not yet know the future of this market. But let's look at what has happened in previous time when the market had a high and it had a low. Okay, so let's take this out right now. We can see, guys, ladies and gentlemen, do we have so we had a low and we had a high. Okay, so I want to show you guys what the market did now. What did I do? Did I cut away? Okay. Stay with me. Let me show you some magic in the market. Yeah, sometimes I show all these things and I'll be like, okay, why don't you just switch to just your patient trading? And I say, oh, can I be patient when people are every day interested in eating money? So that's why the fact that I give you food every day, I still have things for you to feed yourself every day. Let me go to GBP USD. What is it GBP USD I was doing? All right, good. So watch this. So I'm on GBP USD on a daily. Let me go to a 4 hour so it's a little bit more beautiful. So let's look at the time in the market that had a premium and also had a discount. Okay, so I'm going to take this move on the market right now. Watch this. So this was my, so what did I say? First, you want to attempt, so let's take this market to this area, all right? And put all of these components. So this is my discount and this is my premium. So let's say the way you're seeing this market today right now, where the market is today, it has a structure where it has hit, okay, which is the premium, and the low is the discount. So I'm able to identify as the range of the market. So if I'm going to do any analysis on a sell, this would be my scope. It means this will be my overall TP level if this market makes a decision to come down, okay? But before that happens, since I'm on premium, I look for sales. There's something I want to watch out for. There ought to be a raid of this market. It means market has to come back and take this away before it moves. Now, I'll tell you this, okay? It already happened, but because I'm choosing, it already happened. So market first created this, came down, okay, grab this. So I may say this already happened, but because I am using this one, okay, as my point of analysis, let's just play ahead, all right? Oh, this market is just going, why are you going away? You're being too wicked. Nah. This is looking like it's gone so far. Okay, all right, let's take this. Beautiful. So this market came down, never came to the low, didn't even do 50%, but came. And so it means what if this was my approach, this has happened, right? So what am I going to look for? I'm not going to watch for first. There's been a raid, so that's the first component. There must be a raid of point of interest. You write that down. There must be a point of interest of the range. There must be a raid. So now the market has been raided. It means I cannot look for what? My sell analysis following the structure and the component of what market structure. So the first thing is I want to look out for the leg that took away the highest high. So this was a high. So I'm not going to mark up all the high. So this was a high. This is another high. This is another high. This is another high. Okay. So now this is the present one. I'm playing it right now. Is it coming down right now? Good. Now that it's coming down, I want to go look out for what's the highest high here. All right, this is the highest high. What does that mean? It has the highest high. I want to look out for the leg that created that highest high. That's my swing low. Okay, and I'll mark it out. Watch this, ladies and gentlemen. This is where the trading starts. Where is this guy? So it means this was what? My change of character. Let me type it out on the chat so that you guys watch it. This is my change of character, and it's also the first break of structure. The moment the market took that away. Now, don't forget, this is my point of interest. This is all a rate, or this is all a game. This is all a gamble, but this is the main point of interest. Now, if that has happened, what is the next thing I am looking for after, okay, a change of character? There's going to be a second break of structure. So let's play this trade if we find that. Okay, I think it already happened. Watch this. After this was taken and it created a low, okay? This was what? My second low. Let me use a trend line. Okay, it means this candle was the candle that actually took away, all right, my second low. This is the break of structure. So what am I looking for? Though this trade happened in a way that is so devious, okay, but in the small component, there was what? A change of character and there was a break of structure. Normally for me, I would have missed this trade if I'm looking at my component, because why? I would have wanted the trade to come into a gap, which in the course of my play right now, the market didn't come into a gap. I don't know if it came up again. I don't know if it came up again. I don't think it did. It did. I would have been waiting for the trade somewhere around here, but I don't think it did. I think it has dropped TP. Does it TP? Yeah, it has gone. Yeah. So the market actually went, drove down, okay, without coming to where I would have wanted to take the trade. Okay. Now this is my choice, because why? In my strategy, when market breaks the structure, I would look out for market coming back to either a previous low, okay, or a gap. But in the case of this market, maybe because of news, it didn't. But what happened? After the market changed character and it broke through structure, what happened to the trade? It dropped. It means I would have missed the boss, but the market dropped. Did the market drop? Yes or no? Okay. Even if I miss the trade but learn the training, I would have missed the trade based on my strategy and my component, but did the market drop? Okay. Now let's look at for a buy side liquidity, because I've been doing for sales. Every major move that you see market drive big, okay, something must happen. So I'll take the market and I'll bring it out to a buy side liquidity. So market is here right now. We see, watch this. This is all. This is all. You see all of this right now. This is all a move. This is all a component. It means there was a high. What I'm doing right now is not for 20 pip kind of trade or 1 day kind of trade. This is weeks, months kind of trade. You find a position and you dial in. When you dial in, all you just need to do is make the market. When you start having some huge equity, you're going to find this useful. When you start looking for time in trading, you're going to find this information useful. Okay, many of you are working for the market right now, but when you not have enough investment and you just want to be a trader that if I find one opportunity in a month, I can make the best out of it. This is the type of trading that you're going to find useful. So now I'm going to do a buy side. It means the market has already opened. We're just looking data from the buy side right now. So this was a point of interest. This is my range. It means now I've been able to apprehend my range. This is my range, right? Good. It means this is my target, okay, or 50% of it. But I'm not even doing 50% of it right now. If this be my range, okay, what is the first component? So now I'm on discount. When I'm on discount, what am I looking for? I'm looking for a buy. Now, if I'm looking for a buy, why am I on discount? The moment the market takes away a previous low, the market has hit discount. Now, this is even below discount. Now that I'm doing this analysis here, okay, so first there's a confirmation that the previous low has been taken out, which means this market is on discount. So that's what makes you know the market is on discount. Now, I'm looking for a buy, but what's the component of this buy? I'm going to now look for market structure. And if a market structure has to show up, I want to see rate. So this is the low. Market was going. People are jumping in already, just like cryptocurrency. All of a sudden, those who make the market want to come and take it out. And they did. So that's my first confirmation that some big things are going to happen in this market. So what am I going to look for after? So if this is my takeout, now I want to watch out for this leg, right? Because this is where the leg is going to change character. Let's play. Boom. All right. So what's the first thing? I told you guys. So first, there's a change of character, number one. Okay, after I change of character, the next thing is it created a high, right? So this, I'm just going to mark it ahead. Okay. It means it has to break the next structure. And after it breaks the next structure, that's when I find my trade and I get in. All right. Good. So all this while right now, Cambridge is doing nothing. All this while now, Cambridge is doing nothing. All right. Until these legs, boom. Are you kidding me? Okay. So yes, now break of structure has happened. Patience is game. First change of character, second break of structure, which is two break of structure. And if this market has taken this away, then this market has been nullified. Okay. So first is it maintained the swing what? Low. Now a new low has been created, which forms what? A bullish structure. So this is higher, or this is lower low. Okay, this is a low. This is what? A higher low. Confirmation of what? A low that is higher than the previous low. So what am I looking for? Two low has been created. Two break of structure has happened. The next thing is what? My signal activated. Because after the break of structure, I would look for a trade. What did I say? In a previous what? Low. Or a fair value gap, right? So when the market, this was a candle before the market broke and it left a gap here. It left a gap and a previous what? Low. That would be my trigger. And if I trigger around that area, okay, boom. What's going to be my stop loss? The low of that market. I'm swinging, so I don't have to care about what I am getting. What is my stop loss? And let's take it, all right, high. So the first thing, your first target, because this side may be 3 trades. So the first trade may be this area. The second one may be what, 50%, then the other one overall. All right, now let's play. Let's see if this is going to take me out of stop loss. Are we hit TP? No, we're not there. But we've done TP1, okay, which is 1-to-1. We've done 50%, okay? So this is you staying in the month in deep profit and you're just flying. I wish I could make this thing a lot more faster. Trust me, many of you would have been out of this market, okay? So eventually the market, we know the market actually went back up and hit, all right? But before it did that, what did we see? Market structure on a bullish side, okay? It did it well. Are you guys getting, why are you so slow? Because I'm on the 4-hour, right? So because I'm doing this thing on a deeper time frame, it looks boring, okay? But it's the same thing with smaller time frame. It's the same thing with whether you're using an hour or you're using a day or you're using a week. Is the structure. If it happens, if the structure happens after a liquidity rate, you're going to get your trade, okay? But one thing I've always found that I've did this strategy, I've done back testing, I've actually traded, this strategy, again, I have my data on it, is whenever a point of interest on a higher time frame triggers and there is a read on that higher time frame, okay, and it forms market structure either on the bullish side, over 90% of the time, the market will do over 50% move of that range within the first week or two. Okay, Henry, what do you mean? If you notice this trade, all this is just consolidating, came back, struggle, but eventually, all right, market's going to hit. But within the first week or two, market actually does 50%. After that break, it's momentum. Okay, over time, market is going to hit, but the first week on two, you get your best move. And that's a whole lot of money, family. Are you guys getting what I'm saying? How many of you are getting more value in what I'm sharing with you tonight? I think it's making sense now, right? Put sense on the chat. And this could be an assignment. Look for every range in the market. Look for everywhere the market actually sold drastically or bought drastically. Watch out for market structure. it will always play out based off if it has a correct range. Okay. Okay, let me go on a smaller time frame. Some people will be like, daring, Cambry, I don't know how to stay in the market for that long. Okay. I want to do, okay, it's still playing, it's still moving. Eventually it has done that, right? Okay, good. It kept the trend, never came back to take this away. Most of the time when you find it to always play out. Okay, this is a 1-4, almost 4 ratio. Now stop now. I think we can stop now. What's the time? Wow, I've done 1 hour. Okay, one of the things you can do is you can take the template of this trading, okay, and stop. Good, stop playing. And you can back test it, search for yourself, okay, and you're going to find out amazingly, okay. So even if I do a 1 hour right now, I could even do it in 1 minute, and you're going to find out, okay, let me dare 15 minutes. Watch this. I'm on a 15-minute time frame right now. What did I say is the first thing you want to look out for? Okay, so this is a 15 minutes. Now the smaller the time frame, I want to look out for, okay, so market had a sell here and it had a buy. It means this has been completed. But before it completed, let's watch what happened between this area, right? All right, good. So let's see, this was good. All right, beautiful. So this was a low. Okay, so let me play to see if there's a raid. Good. So there was a raid. Now I want to watch out for the leg that took the raid, right? So this is the leg. This is the low that took the raid. So that's our swing low. Now let's watch what happens after that. So there's been a break of structure. There's been a change of character at the moment that leg was taken out, right? So there's a change of character. And the next one is the second what? The second break of structure. So there's now a new low here, okay, which is higher than this low. So let's watch out for what happens next. This 15 minutes. Okay, good. Now watch. Okay, so this becomes our new low, which is also good because it didn't take away what? You have to watch out for the move. If it takes away this, then it's invalid. So these are new low, this is internal low, and there is a break of structure. And after that break of structure, what did I tell you? I'm going to start looking for trades. Okay, so I either wait for the market to come back here, all right, or the market to come back here. Any one of them. So when the market broke, it left a gap. So there's a gap here. Now, the truth is just because you find a structure doesn't mean the trade has to come to you. But eventually, when there is a bullish structure formed, the market is going to delve into what? The dimension. And this is going to be where the market is chasing here. So let's see if it came back paraventure. No, it didn't. All right. It didn't. It tapped TP immediately. It picked up momentum on the second leg. Okay. So this was first wave. This was second wave. It didn't give us a third wave. Third wave is actually the best move in the market. All right. But this went. But did it happen? It was market structure. Okay. There was 2 break of structure and 2 lower high. 2 higher lows. When that happens, that's market structure for you. Okay, you could test it out, different level. Now you watch this. This was a range, right? This was a grab. After that grab, okay, no, that was mitigated. It means this took that out. So this was invalidated. Okay. What else? Okay, we had something here, ladies and gentlemen. So this was a range. Because all you need to do is find the patterns. This was a range in the market, smaller time frame. It means, oh, if I came into this market on a 15 minutes, I saw this low and I saw this high. Okay, all I need to do is find the pattern. Okay, so this is a low and this is a high. I want to trade within this circle. Boom. What happened? What am I going to look at for first? A raid. So the market played, eventually raided. So after the raid, what am I going to look at for? Watch. It's always the leg that created the raid. You want to watch out for that. This is the leg that created the raid. So this is the first break of structure. So this is my second low. Okay. Now what happens next is boom. This is my second break of structure. So all I need to do is wait for market to either come back to that area or come back to this low. When did it happen? Yeah. So this would have been my trade. And my stop loss is going to be what? Below the low. What happened after? It hit the what? Target. Simple as that. Forget I use the word simple. But the moment you find your pattern, find your trade, you find your trade. Does it make sense? And many of you are very interested. If you stayed here right now, it means you guys are interested in market structure. You guys are interested in this strategy. Put strategy on the chat. You guys love the strategy. How many of you love the strategy I've been teaching you right now? Makes sense, right? Put strategy on the chat if you love the strategy I'm showing you right now. There's so much. Even if you don't know it, you kind of have a confidence in what I'm showing you right now. Am I correct? So what do you guys think we should do about it? You know, there are things in the market. You may learn them, but you may not use them today. Just because I'm teaching you right now doesn't mean you're going to use it tomorrow. But it's something you should learn. Because why? It's going to begin to defect all of the irregularities that you chase in the market because it's helping me do so. Not all trades that I call. In fact, most of the time, I don't even call trade. But when I find it, I'll trade it. I trade it with confidence. Now, market structure, let me give you guys warning alert. Are you guys ready to hear it? You guys better talk to me. So I'll give you guys a warning alert. Something always comes when you go deep. See, trading is like phases in life. When you expose a child to something they are not groomed to take care of, eventually they will lose it. It's the same thing with trading. I remember in my first month of trading, my first 2 months of trading, I learned a particular strategy. I didn't know many things. I only knew that strategy. I was obsessed about it. I was doing well. I found a way to do well. And I was making money. My goal was $20 a day. And I was doing $20. I increased it to $70. I was faithful week 1, week 2, week 3. I got into a class with one of the major educators I am at the time. And I learned price action for the first time. Guess what happened? 3 months straight, I wasn't myself in trading. I couldn't win. I couldn't keep up the progress I was when I knew the other strategy. How many of you have had this experience? The more you know, the more your result shows different. You've had this experience, put I on the chat. It has happened to your coach. I couldn't. In fact, I was now losing because why? There's what we call analysis paralysis. I was paralyzed because the concept of that strategy I knew, it was the only thing I knew, so I was good at. I was good when I formed the strategy. But when the knowledge of the structure of the market came, the application of that other one was altered because for every time I want to take that trade, a new knowledge defects that practice. So sometimes I'll be like, let me wait. Okay, let me see how this new knowledge play out. But I still want to get in, and I'll get in. The infrastructure was not aligning anymore. My patient level, it distorted my patient level, it distorted my risk management, and eventually I lost. Every part of me, when I knew the new knowledge, matured. But the instinct in me still want to win in trading, so I do the immature things. But the matured me kept defecting me. It took me a while. It took me more than 3 months. Eventually forget that old one because I couldn't even get it again until I started winning with the new one. And one thing I realized, and that's why I'm telling you this story, is the good things that has the deepest knowledge in trading, they don't happen in your day-to-day trading. It takes patience. And because most of you have learned impatiently, or you learn in the direction of impatient, you cannot wield the knowledge of this patient strategy that has more accuracy, more management. Do you know a strategy can actually detect your risk? Many of you are using your risk to deflect your strategy. I can take a trade. A lot of people tell me, why would you take a trade of 100 pips? I'll tell you, it's not about them. I don't even see 100 pips. I see a pattern. Okay. Because I know my risk to reward. If I'm taking 100 pips, it means I'm going for 300. Based on the strategy. The confidence is based on the strategy, not on the pips. Okay. But it also comes with that this same warning I'm giving you. Imagine in a month, there may be 2 market structure trades that may activate. Sometimes one, sometimes in a month, it may not even activate one. That is why I cannot put it as the foundation of my education as an educator. I can only do it in sessions like this because why? I need to feed you every day when it comes to making money, because the goal is for you to earn while you learn. Man, you cannot really earn with market structure. That is why I teach you to own it. I want to teach you to own it so that you can do it by yourself and liberate yourself. But if it comes to a day-to-day community, we can't use it. So what I do is that when I spot it, I'll call it, I'll trade it, and it will pay me. I may be losing in the other strategy, but when I get one market structure, man, I get it. All right. Does this make sense to you guys? Did you guys see the warning notes? And you understood it? So when you don't just say, oh, Kendry, because one mistake a lot of people do, oh, Kendry, this looks beautiful. You now forget everything you've been doing, you've been practicing, and you shift. You're like a prostitute. Okay, you will shift and just forget everything you labor on and just go to this new fine babe. The babe will disappoint you because the babe will let you put the ring on the finger, do everything. Even after marriage, she said, she'll take my time. It's a patient babe. And you're not a patient one. All right, you're not at the stage where you should be patient. It takes a lot to be patient in trading. Okay. So that babe now, Maka. Yeah, it takes a lot of the patient. When you are still working for the market, man, you don't need patience. You can't do patient. Every day there's the feeling of making money. It's there. You can't go against that feeling. But I'm just trying to do my best as a mentor, not to just drive the obsession of making money every day, but also powerfully learn the skill that will help you retain that money, manage it very well, and also duplicate it. All right. I've taught a lot tonight. Can I get some questions right now? And it's a recorded session, so you guys can go through. But the most important thing about learning is, let me tell you something. I do training, but I don't really teach you. I can train you, but I don't teach you. Okay. What we think about learning is self. When you take this information and you apply it, that is when you learn from it. All I did is train you. All I did is show you. The application is your learning factor. Why a lot of people try to understand, then they think that's when they are learning. No. When you practice, intentionally take this. Go. I set some instructions right now. Go use it, back test. Find everywhere there's a high, low, and there's a drive of liquidity. Go study that drive of liquidity. Before that drive of liquidity, there is always this component of market structure shift, a raid, a shift. If it always happens, if you see 10, 20, 30, 40, 50, even without trading, by just seeing it, what's going to happen is you're going to start having confidence in learning it. And guess what? You're going to start practicing it more. Even if it takes you a year or two to practice and master this thing, it's going to be worth your while. Imagine if $5,000 fall into your fingers and you could find a trade in a month that could drive probably 500, 600 pips. And you could use a standard 2 to drive that trade. Just think about it. It's not a promise. Any questions so far? That's about my time tonight. I'll take questions and I'm done. Okay? I'm surprised you guys stayed on this session that long. What did I do? So I'm going to call some of you and I'll ask you guys questions. Starting from, okay, let me start alphabetically. What did you understand about the class? What are your thoughts about the class? Oh, Lisa, is that Carissa? Carissa, did I get the name right? Coriza or Coriza Lisa? You can unmute yourself and tell me, okay, what you got about the class. Are you there? Okay, you are at work. Okay, beautiful. The next person is Mr. Abel. Musa. Just tell me what you got about the class. Are you there? The mic, I gave everybody mic access. The next person is Akam Alo Ike. Just the word. Came, okay. All right. Akam Alo, you want to speak?
Yes, good evening, Coach.
Good evening.
The class was a very interesting one. At least I understood better the premium and
You didn't
discount
find any confusing factor about the class?
to enter the trade.